welcome. You're watching Talking Point. We have with us a special guest, Nischal Maheshwari, CEO of Institutional Equities at Centrum, joins in. Hi Nischal, it's Amina. Thank you very much for taking the time out to talk to us today. Nischal, budget is behind us. A quick word on what were your thoughts and your key takeaways from the budget?
Hi, morning, Samina. Thanks for having me here and welcome to all your viewers. Yes, I think budget was, to me, I think 8 out of 10. If I look at the overall number basically to give to the budget, I think they have tried to tick all the boxes. So there was something for everybody actually, whether it was the middle class, so they have given a 17,500 rupees rebate as far as taxes are concerned. I think as far as growth is concerned, they continued with that 11 lakh crore allocation to the infrastructure sector. There was a lot of, I think, things given to trying to address the problem of unemployment through scaling up, skilling up. So I think and I think the one of the things basically which we as economists and market participants look at is basically 4.9% as fiscal deficit. That's a very good thing basically to try and control the fiscal deficit. Yes, from a stock market point of view, some disappointment given that the short-term and long-term taxes were up. But I think this is a broader guideline. I think they have always maintained that they will try and see that all asset classes are at same kind of taxation. So we are gliding towards that.
Nischal, we do seem ripe for a correction. Overbought markets, no positive trigger for the next leg of the equity markets from the budget at least. Earnings that were largely flat or a miss on most avenues. Do you feel like a correction is what should happen anytime now? And if yes, do you think it'll be a shallow one because flows that are coming in monthly still remain very sticky?
Yeah, I think that is, you have already given the answer basically. I think money and the flows are very strong. Yes, I think we've been talking about a correction for almost now more than 2 months, but it's been more of a time correction than a price correction. And I continue to believe I think it's going to happen that way because come September, I'm very sure basically that the US is also going to start cutting rates out there, and that's going to be a positive. If you look at it basically in a lower interest rate regime, stocks always do well. So if interest rate starts getting cut, it will start from US. Already we have started seeing China doing a couple of cuts. We've seen Canada cutting the interest rate. So I'm saying some of these countries have already started. So, but obviously US is the big daddy. So once US starts on, basically, I think you will start seeing all emerging market cutting interest rates, and that will be positive for the stock markets. So I do agree with you basically that it's going to be, if correction happens, should be a shallow one.
Right. Nischal, does that mean you're sitting on cash and waiting for that shallow correction? And if yes, what is the quantum of correction you would like to see before you allocate additional liquidity into the markets?
So one, I'm not sitting on cash. I'm fully invested basically. Yes, and I continue to believe basically that let's not try to time the market too much. If the broad outlook still continues to remain positive, economy is expected to grow 7% according to IMF. Maybe and earnings are supposed to grow. I think at least still the guidelines for 25 and 26 is double digit. It may be now lower double digits basically, but it is still a double digit number. So if there is no improvement in the PEs, then at least a 10-12% kind of earnings growth will drive the market up by 10-12% in each of these years.
Nischal, let's talk about sector rotation because the last few months have largely been of money going into sectors largely on back of underperformance. So you had IT and FMCG catch up quite well. Chemicals are making an attempt to do the same. What sectors are you currently overweight on, and where do you see that the markets are priced to perfection? So what are sectors you'd avoid for now?
So I think some of these sectors, though they have not done well, I think BFSI is one of them, which we have been pushing. These are all my thought remains to be basically that interest rate cut is going to happen in the last quarter of the current calendar year, which is September onwards, basically. So whether it is the US or everywhere. So if you look at from the US point of view, then IT should be one sector basically you should be now going overweight on. Similarly, I think BFSI obviously has historically has always done well in a lower interest rate regime. So I think BFSI should be overweight at this point of time. I think consumption has some of the names in consumption, especially autos, have done already well. So you should be neutral there. But FMCG is one basically which we are now pushing because government has put more money in the hands of people, plus the allocation, higher allocations to the rural side. I think that will all help to scale up consumption, especially at the lower end of consumption. So FMCG names, that's why we are saying so staples should do well going ahead. So these are two or three sectors. Then agrochemicals, chemicals, given a especially agrochemicals, given there is a good monsoon. So I think agri as a space should do well. Power continues to do well basically because there is a strong economic growth. So I think these are 4 or 5 sectors basically one should be still invested or can be overweight on.
Right. I did hear you mention that you like consumer staples. Your top three picks at current valuations from the consumption staple space, Nischal?
So ITC is one basically which we have liked very historically and continue to like. And this quarter, this budget again, there was no taxes there, so we continue to like. It has been a top pick in the large caps. In the mid caps, basically we like Imami and Bajaj Consumer. Basically, these are the other 2 picks basically which we like.
Right. Anything in the discretionary space, Nischal, that you're still constructive on? Because with lower personal tax tweaking as well, there could be some more money in hands of urban consumers.
Yes, so we like I think capital in consumer space we like Crompton Greaves. That has been top pick. Then some of these cable companies still interest us, so we are positive on Polycap. So these are some of the companies basically which we like.
Right. Let's get into banks. Axis Bank numbers were a huge disappointment. There is asset deterioration. While the frontline number may not have looked as weak, when you do a deep dive, there is weakness for at least the larger private sector banks. We had HDFC Bank as well, where the earnings were okay, but I think it's more of a bank that's work in progress as we see it. We believe they've also hiked FD rates yesterday by 20 basis points, and that's been a complaint, right? The credit offtake has been higher than deposits at this stage. Keeping those factors in mind, how would you approach the private sector banks? Do you like anything at all here that our viewers can probably add to?
So HDFC Bank continues to remain our top pick. Yes, it has underperformed the last 1 year, but I think it still ticks all the right boxes. We look at its results also. I think management is very clearly focused. They are saying we are not really bothered about growth, but we'll focus on margins, and that's what they are trying to do. And I think with this hike in deposit rate, I think that will help them in continue to at least also continue with the growth. So HDFC remains our top pick, ICICI Bank, and one of the smaller banks which we like is RBL. Not a very good set of numbers in the current quarter, but I think in valuation wise and what the management has been guiding for some time, I think these are they are doing pretty well. So these are the 3 banks top picks basically as far as banks is concerned.
Right. What about non-banking NBFCs at this stage? So some of those, insurance companies have posted good numbers. Of course, we saw SBI today, and it seems like the product mix with a larger focus on ULIPs has not done too well for margins for an SBI Life. But tell me what your view on insurance players are, and what do you like here? Is it life versus non-life? And also, if you can extend that further to other, equity market participants. So your Angel ones, your 360 ones of the world, and I guess Centrum you can't comment on, so we leave that out.
So we do not cover the insurance sector at the moment, but we have ICICI Lombard under coverage. We continue to like that space more than the life insurance space. There has been a good growth which has been there. And with the revised pricing up in both allowed by ADA, both in case of health as well as automobiles, I think they are set to be in a good space. So we like that one. Insurance do not have coverage, so not able to comment there. But on the whole NBFC space, if I look at it, I think there are two or three spaces in non-lending which we like. One is the whole space of the stock markets. We like CDSL, BSC. I think that is one space basically like within the broking space. We do not have much coverage, but wealth is the other space basically which we like a lot. And there we like Novama over everybody else. So that's the way basically we are looking at the space.
Right. Nischal, this budget didn't really do very much additionally to boost capex. They maintained that target, and of course, we only have 8 months to go. So there's also got to be enough to absorb the kind of capex money that the government is looking to spend. We saw earnings from L&T that were a clear beat on expectations, and they've also had a good quarter despite the fact that it was elections. How do you view the L&Ts of the world, and is infra still a good play, you think?
Yeah, I think basically with the government focus there, I think infra should be a good play. What you have to be looking at saying that which will be the winners among these guys. So last, I think 2 years, roads have not done well because there was not much orders from the roadside. But I'm saying people who were focused on to railways, people who were focused on to metros, private sector buildings, I think they have done pretty well. So you have to be a bit choosy about where you want to invest. But a conglomerate like L&T, I think it gains across the board because they are present across the board. So I think Larsen still continues to remain a top pick out there. But I think there are a lot of other players basically which are now doing well. Road sector also is start getting once again good orders. And I believe basically more are to come basically in this current year with this 11 lakh crore spend with the government is looking to do.
Nischal, one sector that largely has beaten expectations this earnings season has been the IT pack. Now, some may argue that it could be because our expectations going into this quarter were quite low. Tell me what you think about the services business and the ER&D space, and if you like any specific names here. Also, we should be mindful that the US goes into elections, and if Trump does come in, that usually is great for business.
Yes, I think so. Current quarter, I think yes, the expectations are low, and I think now most of the companies have started giving some indication of green shoots. So one of them was basically that each one of them is now looking to incrementally hire, and they have started showing you positive numbers in hiring. So I think all the managements are definitely seeing internally, though some of them are guiding and some of them are not, but all of them have started seeing internally. So we look at this one strong parameter saying that if their hiring has become positive, then obviously they are looking to create the bench and they are looking that the order book is getting better and outlook is getting better. So that is one indication basically. And the second thing remains to be is the orders still seems to be pretty good, though these are all long multi-year orders, and we have seen that there is no much let up on the order intake. So these two things are making us positive on the whole scenario. Some of them have already guided numbers on the upside. So and obviously, as my expectation earlier, that the interest rate cut will be there in the current year. So definitely, I think these two, three factors makes us positive on the whole IT sector.
Nischal, up until now, of course, I've thrown stocks at you, but why don't you tell me 3 stocks that investors and viewers can allocate funds to across market caps, across sectors?
So I think these markets, at these levels, I would play it a bit safe, basically. I think HDFC Bank continues to remain a very good bet at these prices. I think that is one of the stocks one should definitely have in its portfolio. It's one of the largest bank in the country, amazing quality, and they still continue to grow. So I'm saying a 15-20% kind of a growth if you want to have in your portfolio. I think this is one stock which you should have. I think another stock which I like is DMart, a bit expensive, but I think if you are looking at explosive growth happening across the retail sector, that is one player basically you should be in your portfolio. And the third, I think the old bellwether Reliance. Again, there are a lot of triggers out there. At least two of them are pretty visible in the next 1.5 year. That they will definitely look to hive off both their subsidiaries, and we have seen already that they have been able to create value through Geo. So I think Reliance is another stock basically you should definitely own. So be a bit safe at these levels, and there are good values available in all these stocks. So that's why I believe basically stick to the large caps.
Right. Nischal, we'd have loved to chat with you longer, but unfortunately out of time. We'll hopefully connect with you soon again. And thank you for all those stock ideas that you're, of course, betting big on. We'll take a break on that note, wrap up Talking Point. Up next is the FNO show, so stay tuned for more on the other side. And we're talking to the management of Federal Bank, so a lot more on the other side.